Cryptocurrency started as a niche experiment in digital money, but it has quickly grown into one of the most debated forces in modern finance. Unlike traditional currencies controlled by central institutions, cryptocurrencies operate on decentralized networks that allow for peer-to-peer transactions, global accessibility, and new forms of digital ownership. Supporters believe this shift could reshape how value is stored, transferred, and even created across borders, especially as more financial systems become digital. Today we will talk about cryptocurrency could reshape global wealth. So before we get started, make sure to hit that like button, also subscribe to my channel. 10. Cryptocurrency started as a small experiment. When cryptocurrency first appeared, most people treated it as a niche experiment with little real-world importance. It was seen as something technical, uncertain, and far removed from traditional finance. Banks, governments, and major institutions initially ignored it or dismissed it as temporary hype. But over time, crypto evolved into something much larger than a simple digital currency idea. It became a new form of financial infrastructure, attracting investors, developers, companies, and entire ecosystems around it. 9. Digital money changes how value moves. One of the most important shifts cryptocurrency introduced is the idea of borderless money. Traditional financial systems depend heavily on banks, intermediaries, and centralized institutions to move value between people and countries. This process can be slow, expensive, and restricted by geography or regulation. Cryptocurrency introduced the possibility of transferring value directly between individuals without relying on traditional gatekeepers. 8. Trust is moving from institutions to code. For centuries, financial systems have relied on trust in institutions such as banks and governments. Cryptocurrency introduced a different concept: trust built into transparent systems and cryptographic technology. Instead of depending entirely on centralized control, blockchain systems use decentralized verification to confirm transactions. This shift is important because it changes where trust is placed in the financial system. 7. Financial access is becoming more global. One of the most powerful potential impacts of cryptocurrency is financial inclusion. In many parts of the world, people still lack access to traditional banking systems. Opening accounts, transferring money internationally, or accessing credit can be difficult or expensive depending on location. Cryptocurrency provides an alternative financial system that can be accessed with only an internet connection. This creates new opportunities for people who were previously excluded from global financial infrastructure. As adoption grows, crypto has the potential to reshape how individuals in different countries participate in the global economy. 6. Traditional finance is being challenged. Cryptocurrency does not exist in isolation. It directly challenges existing financial systems. Banks, payment processors, remittance services, and even governments are paying attention because crypto introduces competition to traditional financial infrastructure. This does not mean traditional systems will disappear, but it does mean they are being forced to adapt. Faster payment systems, digital currencies, and blockchain-based solutions are already influencing how financial institutions operate. 5. Volatility is part of the transition phase. One of the most visible characteristics of cryptocurrency is volatility. Prices can rise and fall dramatically within short periods of time, which makes it feel risky compared to traditional assets. However, volatility is often a feature of emerging systems rather than fully mature ones. New technologies typically go through phases of instability as adoption grows, speculation increases, and market understanding develops. Early internet stocks, for example, also experienced extreme volatility before stabilizing into long-term industries. Crypto is still evolving, and price fluctuations reflect both speculation and uncertainty about its long-term role in global finance. 4. Institutional adoption is changing the landscape. In recent years, cryptocurrency has moved beyond retail investors and entered institutional attention. Large financial firms, hedge funds, corporations, and investment managers have begun exploring or integrating digital assets in various ways. This shift matters because institutional involvement often brings liquidity, infrastructure, and legitimacy to emerging markets. As more established players enter the space, crypto becomes more integrated into the broader financial system rather than remaining isolated from it. This transition is one of the key signals that cryptocurrency is evolving from an experimental asset into a recognized part of global finance. 3. Technology is driving a new financial infrastructure. At its core, cryptocurrency is not just about digital coins. It is about blockchain technology and programmable financial systems. These systems allow for smart contracts, decentralized applications, automated transactions, and transparent record-keeping. This technological foundation opens the door to new financial models that were not possible in traditional systems. Developers can build decentralized exchanges, lending platforms, digital ownership systems, and more without relying entirely on centralized authorities. This innovation layer is what makes cryptocurrency more than just an asset class. It is also a platform for building new financial infrastructure. 2. Long-term impact depends on adoption, not hype. The future impact of cryptocurrency will depend less on short-term speculation and more on long-term adoption. Many technological revolutions go through cycles of hype followed by correction and gradual stabilization. The key question is whether crypto continues to gain real-world use cases in payments, finance, technology, and global commerce. If adoption continues to grow, cryptocurrency could become deeply integrated into global financial systems. If adoption slows, it may remain a niche or alternative asset class. The long-term outcome depends on how effectively it solves real financial problems at scale. 1. The real reason cryptocurrency could reshape global wealth, it changes who controls money and how it moves. The deeper truth about cryptocurrency is that it represents a shift in how financial systems can be designed and who has access to them. Because the truth is simple, money has always been controlled by centralized systems, but digital technology now allows value to move, store, and interact in completely new ways across global networks. What do you think of our video? Let me know in the comment section below. Before you go, please hit the like button and subscribe to my channel. Thanks for watching.